following program is a real estate and mortgage show and does not necessarily reflect the views and opinions of Reality Radio 101, its advertisers and sponsors, or its listening audience. Listener discretion is advised. Ladies and gentlemen, right to your hosts of Your Home, Your Money, Randy, Jackie, and
Here we go, guys.
Anthony.
Hello, y'all.
Good morning.
Good morning, ladies and gentlemen.
Do I have to look at all these cameras? Because last week I wasn't here. I was doing it remotely, so it's a little odd for me. I'm like, where am I looking?
Cool.
What do I look like? Can't see nothing.
You look good, babes.
Why, thank you, but you always say that, so.
Because you always look good.
Let's see how long this lasts, ladies and gentlemen.
So that's out of the eyes of a husband.
Okay, babe, you want to start us off?
Oh, we're right into it, are we?
Yeah, let's go.
Okay, so then I'm up first. So which Ontario city do you guys think has the hottest real estate market right now? Think about that for a second, quick second, because I'm going to go right in and tell you. It is Kingston. Believe it or not, Kingston. Even though the sales have dropped, prices are up by 24.8% there in Kingston. So sales have dropped, prices are still way up. The April, had 380 sales. There's only 136,000 people that live there. So that's a pretty good ratio when you think about it. The benchmark gains are still in double digits up there, and price levels are at an all-time high. And they say it's people moving. It's not, it's like people coming in from Toronto. It's not moving within. So they're gaining population as well because there's people moving there. It's not local people moving back and forth in their little areas. So I don't know, guys. Would you guys consider moving to Kingston?
For me, Kingston might be a little bit too far.
Yeah,
What is
yeah.
it, like 2 hours?
I think so, 2 to 3 hours. So the pricing, is it much cheaper than the Toronto? Because you said prices are up.
Yes,
Yeah.
anywhere is
You're in
not
Kingston.
cheaper than Toronto. Yeah.
But I was wondering, because when you said, well, as people moving to Kingston, that kind of makes sense, because with your numbers, if there's 380 sales and only 136 people,
yes,
that's
population.
almost like 1 in 6 people are buying homes. That's insane. So yeah, it would
Yeah.
have to be people moving in,
Yeah.
because that's huge. So I'm guessing that they're just moving there to get away from the Toronto prices, because the Toronto prices are just way too high. And that's interesting also, because it's so high. I'm wondering if it's sort of like the tail end of the market, the last of the Mohicans sort of like running out, because now the markets are cooling a lot. And so for them to be experiencing a 28% increase, which we all know is insane. 28% is an unfair.
24, babes.
24? Is it 24?
24.8.
25% increase is an unfair increase. You know, realistically, you know, because can you afford 25% on 500,000? Let's say.
Depends on who you ask. For the seller, I'm sure they're very, very happy. The buyer, maybe, well, they're probably happy for now. As long as they stay there, they should be good. So.
Well, the seller has to, typically speaking, is buying another home and usually more expensive, so they're paying much more.
Yeah, but if they're selling and buying in the same thing, at least they can maybe upgrade and still have the same second mortgage. So I guess you could
Exactly,
you could get
bigger
200,
home,
yeah.
right, for your money. So
Or-
some people like that.
Or maybe they're empty nester and they're downsizing.
Downsizing,
Yeah,
though,
so-
there's
Yeah.
the advantage right there.
You go there, I mean, you can get a little bit, I'm not saying like huge land, but you can at least have a backyard. In Toronto, that's kind of hard these days.
Yeah.
With all townhouses, and a lot of the townhouses don't even have backyards. Like,
some
you
of
can't even
these-
barbecue.
Yeah, some of these places, it's, I don't know, like no green space. It's just
Nothing.
Yeah, then you have like your garage in the back sometimes with a little laneway. I don't
Yeah.
know,
It's
I actually like that. I don't know why. I have
But you
because
can't
but
barbecue
it's a
or
little tiny.
anything.
They got a little tiny backyard, which I like because it means I don't have to mow the lawn, right? So and I don't like mowing the lawn.
You don't even have
So
grass at your place.
yeah, not anymore. But the thing is that you know you don't you got like five up and downs with the lawnmower and you're done.
You don't, it's not even that, I don't think,
Five
in
up and
those,
downs.
but I think in some ways the house gets designed a little better because the garage is not built in the house.
Into the
Okay.
But
Yeah.
then then you're walking through your
Yeah.
garage, through your
And-
backyard to get in your house
And
too.
if you rip off the roof of the garage and put a cathedral roof, then you can build a little loft up there, have a game house, boys area. You know, get away from the wife because you know she's not gonna let the
That
boys come
sounds
over.
amazing.
And the garage is separated from the house, so it's like the guys can go out there talk, and it's not even like she can open the door and sort of yell at you. Are
And
they
it's
going
not
home
even
now?
like, guys, this is the funny thing, ladies, it's not even like we want to open the door and know what you're doing.
Well, maybe you don't, but a
We
lot
might
of the
put
women out there
we
want-
might put a padlock on that door outside and keep you in there.
A lot of women want their husband to come back in and do stuff like the garbage, maybe try to help mop the floor, because this is the new age, right?
That doesn't happen at our house, so.
Thank heavens.
Can't
But
get
you're
that, huh?
doing garbage today, yeah.
Yeah, I did garbage.
Once this week, yeah.
Were you trying to figure out what year it was?
Yeah, which year is exactly it, Anthony? You know, I mean, when we lived in Pickering, when I was at home with the kids and I didn't work, he would come home every night from work, and I would take his car and go to the garage, go to the gas station, and fill it up with gas. So when he got up to go to work the next morning, the car was full. I did that whenever the car needed gas. He didn't have to do anything, and now he's putting me back to work.
You know,
Now he's got to do everything. When we got to stop for gas, he always cries. I'm like, don't worry, I'll pump the gas.
you know, I was wondering how the car kept filling up. I was thinking it had great gas mileage.
was it like the laundry? How does
it
the
went for
laundry
like
get
5 years without ever having to put gas in it. I thought it just had great gas mileage.
And knowing you would, because you don't know what it is to change oil, I mean, I used to change the wipers on our cars myself, everything. I was
Yeah.
like I should have been a man. I should have been a plumber. I really wanted to be a plumber, people. Instead, I'm a real estate agent.
Laura's going to make some money as well.
Emails.
All right, so ladies and gents, let us know what you feel. If you have any emails, also just so you guys know, we have a new email address we're going to be using, onair@yourteam.pro. So feel free to write in with any questions, comments, or topics you might want to hear about. We look forward to hearing from each and every one of you. Also, Gary, do you have any emails on your end?
Just have one. And what's that email address so I can make sure I put that out there?
onair@yourteam.pro. So
Okay, folks, you heard it. On air at yourteam.pro. And that's active now?
that is active right now.
I'll put out a blog right now on it. On air at yourteam.pro. Okay?
Yeah.
And then you guys can have that. Okay. Do you want me to, hey, anyone, folks, if you want to write in, you can use that new email address. And would you like me, Anthony, to forward any emails to that today?
Oh, yeah, for sure. That would work out perfectly.
Okay. Very good. You have one email here from Kate, And Kate just says the real estate market in Kingston is going up is because they emptied the prisons.
They emptied the what?
Yeah, empty the prisons.
Prisons, because Kingston had a penitentiary that they closed.
That's true
So
too.
that's funny. Thank you, Kate.
Hey, they got to live somewhere.
Yeah.
Actually, doesn't the Liberal Party want to give them deposits and help them buy a home?
What?
Is this for real? I have no idea.
No, probably in the States. In the States, they do give them the voting rights.
For a
and-
minute there, I thought, okay, it's
Trying to-
really
trying to-
gone.
Trying to introduce some alternative facts.
It is election time, so don't be surprised.
All right, ladies and gents, so let's continue on. So I'm going to talk about something that some of our listeners last week were speaking about, crypto. So I'm just curious, is crypto, or do you believe, is crypto the future of purchasing or investing in real estate? Now, crypto, it's obviously been around for a little bit of time. For those of you early adopters who got into Bitcoin when it was $1, $5, even $1,000.
Those lucky people.
Yeah,
you
those. Well, you would have called them crazy, the quacks back then.
Yeah.
But they're laughing right now. Well, it depends. Like, I don't think too many of them would have kept it until when it got to $70,000 because it would have been pretty hard to kind of turn down some of those increases.
mean? Yeah.
But I'm sure there was a few of them who maybe forgot about it and came back to it and could be like millionaires right now. But so what I want to talk about specifically is, because not a crypto show, it's more a real estate show, is can you use RIP or crypto to purchase a home? And what I'm going to talk about today is more for the people in the States. So there's been a few companies that have tried to actually allow you to make payments using Bitcoin. One of them was they came up last year, but they didn't really last long. They allowed you to buy with Bitcoin. That one they fell through. However, there's a few methods where you can use Bitcoin to, well, for one, use it as collateral for like a loan, right? So how it works is there's a few companies in the States, BlockFi, Celsius, and Unchained Capital, where in a few states you can use your crypto and actually use it as collateral for a loan. So what that does is, instead of having to cash out your crypto and getting a taxable event, it's sitting there and it's used again as collateral for like a down payment. Now, there's pros and cons to this because for any of you who are following crypto right now, it's kind of a bloodbath right now. At the time of me reading one of the articles about this, Bitcoin at the time was $47,000. For those of you following Bitcoin, I believe right now it's around 30,000. It got as low as 24,000 within the week, and it's up and down. So it's, unless you have one of the, again, I don't want to get too technical here, but the stable coins where it kind of follows US dollar, there's a lot of give and take in the price, and you could be a millionaire today and then 1,000 there tomorrow. So yeah, so if you're willing to kind of take that risk with the Bitcoin or with your for the loans, it's an option. Again, one of the drawbacks though is if as Bitcoin goes down or the crypto goes down, what can happen? You might get like a margin call, which means you're gonna have to add on to your crypto stake. So it's an option. Again, I'm not sure if I would do it, but it is out there for you. Another method is if you have two people who are just willing to say, you know what, I have a home, it's worth $500,000. You have $500,000 in Bitcoin, Ethereum, whatever it is, and we decide to transact, then you're free to do that. There's no issues there. Again, it's just a contract and you go through the purchase and sale. So that's the main things. Again, I don't want to get too deep into it because we can go on for a long time with this. Actually, one last thing, NFTs, right, non-fungible tokens. They're thinking of, instead of using deeds, actually you can use an NFT as your kind of proof of purchase, proof of sale. And one home was actually sold in Florida. Where was it? For 210 Ethereum, which at the time was around $600,000, and the buyer received an NFT as proof of ownership, right? So, again, how NFTs work is there's smart contracts, blockchains, which basically means everything is in the open. So you can't mess the records up. It's when it's there, right? So that's kind of the pro of it. Now, again, with crypto is supposed to be decentralized, so when you mix it with real estate, it's kind of like a gray area. It's like, do you really want to do that? Because once you take the crypto from the cloud and bring it back into society, you're then for sure paying taxes, right? Again, you should be paying taxes anyways. That's up to you. But once you take it from the cloud and bring it into the real estate transaction, it's a taxable event then for sure, and you got to take that into consideration. So My question to you is, would you trust buying or selling your home or next home or selling your home with crypto? All right, so send us an email. Also, you can send a comment if you're watching this online, and I look forward to hearing from you.
Well, what can go wrong?
What can go wrong? Well, he said it right at the beginning. Like,
I know,
you
but-
sell your house, okay? So we sell our house for $2 million.
If you're showing
So-
proof that you have it.
Yo, babes, I'm just explaining. You sell the house for $2 million. We're all happy. You're like so happy. You're actually hugging me, and I'm feeling great, and everything feels awesome. And we say, yeah, and it's a Bitcoin, and we're like so happy. We're investing in Bitcoin, and we close on it, and it closed yesterday. And yesterday, Bitcoin was trading at $47,000. But today it's trading at $24,000. We just sold our house for $1 million. We just lost
That
$1
shouldn't
million
be on us,
in
though.
one day.
Oh,
Yeah,
because it's already
because
ours.
because it's that volatile.
It's
And
it's volatile both ways. It's again,
it could happen
Yeah,
the other way
yeah.
as well, but I wouldn't want to take that chance. Like, I mean, it's one thing to sell your house, do your $2 million, get your $2 million, and then say, hey, I want to go and put it in Bitcoin and see what the heck happens. Then that's on you. But if you're just doing it as a layman, which we are when it comes to cryptocurrency, and we sold our house for $2 million, you're hugging me, and the next day it's $1 million,
slapping
I'll
you.
never get a hug again.
and the thing is
Especially
too,
if I was the
Went
one
from
that
a
said
hug to a slap.
hug to a slap.
and the thing too is with again, there's many different types of crypto. You have Bitcoin, Ethereum, Luna. There's a whole bunch of things, and you have what's called stablecoin. So what a stablecoin is, I kind of touch on it a little bit, is it's basically it's pegged to the U.S. dollar, which means whatever the U.S. dollar is, if you have 10 of these stable coins, it'll always be $10 theoretically. However, over the last week, again, one of the I think it was Luna, it had like I'm not sure exactly what happened, but it went from the stable coin for that went from $1 to like 30 cents, basically.
Yikes.
Like sorry, thank you. So down 99%. So if you own Luna,
99%?
yeah. So if you
So
were a
it's
millionaire,
like nothing now.
So again, if you were a millionaire with Luna, you're now again a 10 in there, $10 in there. So you got to be careful. Make sure you do your research and
What the
Yeah.
heck?
Well, that means that we sold our home for $2 million, and now we got, what is it, $2,000?
I'm never doing that.
So now the next
Straight
day
up.
we wake up and there's $2,000. Holy smokes, that would be a big problem. Like,
You think?
I think you might even end up getting divorced over that one. What do you think?
Well,
Would you just leave me?
So you might,
we'd have nowhere to go.
you might be lucky if it's just a divorce.
Can you imagine?
We can't even divorce because we can't afford to divorce at
What is
that
that? What is that
point.
station with the?
I
We're
concur.
stuck together.
Well, what would happen if you sold your house for the $2 million? You did it in what are those coins called?
The Luna?
Luna coins. They dropped 99%, so your $2 million is worth what, 2,000, something like that. So then it's worth 2,000, but you have a house that you're closing on.
I know. That's what
in
I'm saying. You're
Lunas,
homeless.
and you only have $2,000 to close on it.
You're homeless.
Damn.
I hope I haven't moved out of my original house yet because I'll just squat there.
This is,
Try kicking me out. Come on.
yeah.
That is scary when you put it in like real simple terms
Yeah.
like that. That's scary as hell.
Again,
Yeah.
there is always volatility. Again, with crypto, you never really know. Like I think long term, it'll be okay, but I don't know if I'd buy or sell anything with it. For me, it's if you have some disposable income, sure, put some in crypto, put some in different places, and again, if it goes up, then cash out when you feel necessary. But in terms of like, if it's something where, like, for example, with the house might close 90 days, and you're banking on 90 days of holding that crypto, I don't know if I would be if I'd have the cojones to hold out that long and play with the ups and downs.
Ride the wave. I think personally, for me, I would be like, it's something I would dip into, but not buying a house or in real estate. It would be like my extra.
Yeah.
That if I lose, I don't.
Yeah, for me, like,
care.
I
which
have.
is which is kind of what they say about the stock market,
Yeah,
right? They
exactly.
say people that really win in the stock market got big money to put in, and don't mind losing it.
Well,
And it's a long-term game. It's kind of like the real estate. It's still long-term even with crypto. If you want to, Well, with crypto, you could win. You could do quickly too, because crypto, because it's so volatile. If you know what you're doing, you can make money, but it's probably more likely to lose money for most people, because most people don't know what they're doing.
Yeah, it's a big learning curve. It's not just put your money in there and then just walk away, right? It's not as simple as any of that.
So years ago, I don't know, it was 4 or 5 years ago, something like that. Can't remember. Quite some time ago. We had a friend that introduced us to a coin called Ilcoin. And at that
Algamos.
time, Algamos, Ilcoin, at that time, the Bitcoin was $1. And we could get the Ilcoins at 10 cents.
So we bought the
And
old
so,
coins.
you know, everybody's saying the altcoins are going to be the next big thing. The problem with Bitcoins was the problem with Bitcoins, right? Because we could have got, we only spent like $400 and something.
So you could have had 400
Bitcoins, right? And instead we bought like 4,000 Ilcoins, and they're like in court or something like that. I don't know. They're not worth anything. Yeah. So I mean, it's a crapshoot, right? And then who's going to buy Bitcoin now at $24,000?
No, a lot of people, like, honestly, because personally, I think Bitcoin it'll recover. So if buying it now, you're buying at a discount. I would consider, but yeah. So I think there will be a lot of people who are actually buying it now, especially people who have a lot of it and who have the money. I think they're going to purchase it because again, it's they're looking long. If you're planning on holding for a few years, because with how Bitcoin works is there's only so many that come out, right? I'm
Yeah.
not sure what the number is, and once that's out, right? So
Yeah.
there's no you can't add more.
Same thing with Bitcoin.
So what's
Except
tomorrow?
there's none coming out,
Yeah,
like zero.
But Bitcoin has obviously more traction. Like it's the
It's the
big daddy
coin.
on the market.
It's
yeah.
anonymous. It's
So-
anonymous.
Well, they're
What's
all-
tomorrow
a
but
lot-
the story?
a lot of-
Don't listen to your friend.
Yeah, but the problem was is
Anymore.
what we didn't like about Bitcoin is that it fuels like drug trade and all that stuff. And there was it Silk Road, I think it was, as a website where you could go on, use your Bitcoin, and buy any drug there is.
So it deals on the
and
black market.
Yeah,
basically, you're saying.
because it's
Well, it's
anonymous. You can buy it with the name Mickey Mouse, right? And own it as long as you have the password. That's it.
Yeah, but if you're not doing that and you're staying away from that, why would that affect you?
I just didn't want to fuel that economy.
But you can do the same thing with
No,
cash.
instead we
not
fueled
as,
the
not
one
as,
that
not as,
didn't go
not as
anywhere.
easily with cash, but you can do it with cash as well.
So yeah. But you know what? Let us know, guys, if you would do it. I know one of my friends, his son purchased a car 50% with not Bitcoin, but 50% with cryptocurrency
yeah.
and 50% with money, and that was his first car. And so, because he trades in those coins and that, and he did quite well. And that was pretty cool, but I don't understand it, so it's a little difficult for me to wrap my head around it.
Nice. All right, guys, so we have a few emails here. The first one's from Carl. Carl says, "Hello to your team. I always love listening to your show. Randy, don't let Jackie go out and fill your car alone at night. You do it. love you guys."
Thank you, Carl.
Thanks, Carl.
Listen, I could go on a showing up north and be gone for 5 hours and Randy wouldn't even wonder where I am.
I'd be busy.
He'd just be like, "Oh, you've been gone 5 hours?" It just felt like an hour. Like, yeah, so. And I'm little, but I'm feisty. I got a kick to me.
Mighty Mouse.
What's the one, Geronimo? I can't remember the mouse that used to run around. Anyways,
Isn't it Mighty Mouse?
Oh, you're
Mighty-
talking about Tom and Jerry?
no, it was like a Mexican mouse. It wasn't Mighty Mouse. Like it was like Mexican and he would run fast. Anyways, it's probably considered
I
racist.
can't run fast,
Be considered
but-
racist now, probably.
Riba, Riba.
No,
That
he would say
one?
that. Yeah, that guy.
Yeah,
Oh,
that
I know who
cartoon.
you're talking about. I don't remember his name.
Andre, ooba,
I
ooba.
love that cartoon. All right, the next one's from Bob. Bob says, "I work for the federal government here in Canada in finance compliance, and I can tell you this: stay away from Bitcoin and other digital currency ideas. They will ruin society. A lot of us here in the government are against that, but we will not make our opinion public, or we can lose our jobs. Our government is pushing society that way to digital currency. Stay away from voting for anyone that wants this. Paper money backed by gold is the way to survive." Well,
But paper money isn't backed by gold.
it's not backed by gold. Yeah. If it was, I would definitely agree with that. When was it? I think in the 70s, the states took them off the the U.S.
Yeah.
Whatever.
Yeah, yeah, yeah. Everybody now, huh?
Was 60s? Yeah. Oh, it was Nixon, right? Nixon took them off the gold standard. That's what it's
Yeah,
called,
yeah. The issue, I definitely am concerned about cryptocurrency. I think that's kind of stock market-y stuff. It's cool that you can do exchanges with it. It is cool. It's hip. It's all that stuff. However, cash we're used to, so we understand how it works. But the problem with cash is that government can manipulate it. And that's what we're going through right now. You see, our government just went out and spent a whole bunch of money. And what's happening now? Money's being devalued, and we are paying inflation through our nose with it. So government can just create it and spend it and do whatever they want. Bank of Canada backs them up by buying all the bad debt, whatever, and just allowing this to happen. And then we pay for it through inflation. That's my concern there with the debt instrument that we're using right now. But I do agree with him is that if we did have currency that was backed by gold, it's finite. It would be much more stable. Government wouldn't be able to play all the games that they're playing with it at our expense and our children's expense and our grandchildren's expense.
An issue with crypto too, and same thing you were saying before, where because of the anonymity, that word. Because of that, again, a lot of I guess scandal things can be done. So there are some, I guess, a lot of gray areas, a lot of people who are getting kind of messed over with it as well. So there is truth to that as well. And the last email we have is from Brenda. Brenda says, "Hi Randy, Jackie, and Anthony. We want a real estate crash. This is the only way I can afford a home. Please crash." So I think Randy might be talking about this a little bit going forward in the show.
Yeah, I will definitely address that. And who was that?
That was
Brenda.
from Brenda.
Brenda.
Yes.
Thank you, Brenda, for writing in. And does Gary have anything separate?
No,
He's sending them.
I know, but
I thank you. I'm forwarding. If they do come in, I'm forwarding them to your new email address. I did put out a Facebook, Twitter, and blog quickly with your new email address. And folks, if you're just tuning in, you are listening to Your Home, Your Money, and you can write us right now. Our email address is onair@yourteam.pro. Back to you.
you can always leave a comment as well, and we'll try to get to those as well.
All right. The last email we have is from
Steven?
Cindy. The mouse. It's Speedy Gonzalez.
That's it, yes.
Speedy
Adios.
Gonzalez, andale, uba, uba.
Thanks, Cindy.
Okay.
Thank you, Cindy.
I might have to go find that on YouTube later.
Yeah. Well,
Yeah, he was a cutie.
All right, Jack.
Okay, so the next topic is, are you a first-time home buyer? And if you are, here are the 7 mistakes first-time home buyers make. So if you're a first-time home buyer or you're, starting to look or anywhere in the real estate market at all, you're going to want to hear this. So number 1, giving up before you even start, which is for Brenda, who said she needs a crash. Brenda, sometimes you can't afford it. So what they're talking about is just assuming that you can't afford to get into the market, that you can't buy a home, and you continue renting instead. So sometimes, you know what, maybe you should speak to a professional and see what they think and how. And sometimes talking to somebody up front, even if you don't feel like you're ready, it's that person can help you get on track and make the right moves toward being able to get into your own home. So I think it's important to put it out there to a professional, whether a mortgage broker would be, I guess, ideal in that situation. Next one is number 2, making the right offer. So when you do finally are able to get in the market and you're making an offer, you want to make sure that you got all the facts and the information on that home. You want to know what's going on in the area, what has went on in the area, what are the houses listed for, what are they selling for, what are the condition of the home, what is listing versus selling prices. You want to know everything. So you want to deal and ask your real estate agent for all those facts. So when you go in and you make the offer, you got the best possible chance of getting that home over any other offers. Number 3, misunderstanding your budget. Now this one here is not understanding the costs associated with buying a home. I think sometimes when people buy a home and then all of a sudden they're like, oh my gosh, they're like shell shocked because they got all these extra expenses that they weren't really looking into, even like closing costs for the home. You need at least between 1 to 2% set aside of the purchase for that. You got heat, hydro, all these things, taxes. Maybe you want to reno a room when you first get in. Closing costs, which I already talked about. So I don't want to spend too much time on them because we're going to talk about them after. Number 4, failing to prepare. Once again, we're talking about setting aside 2 to 4% of your budget for maybe you want to do an inspection before you do an offer on the place. There are people that do that. When they go out, they do a showing, they know they want the place. You can't do the conditions are coming back now to the market, but when we're in the heated market, you can't do any conditions. You got to go in firm. So some people will opt to book a 2-hour appointment if the listing representative will let them. And what they do is they bring in a appraiser and a home inspector, and they go in and they look through the property. They get the results. They know what's going on in it before they even do an offer. And also, you've got to take into account that after you buy a home, there's always little things in that home that you want to change, or it might be little issues. So you need to set aside a little money. Don't buy the house and have nothing in your pocket. What we like to call house rich and cash poor. Number 5, skipping the inspection once again. Inspection is crucial. I want to put out there that, actually I'll wait until the end and do it. Number 6, not using a broker. So what they're talking about here is sometimes people like to go to the listing agent to buy their home, and this article is suggesting that you get your own buyer broker agent to help you. At least then you've got someone who's totally in your pocket working for only you. And number 7, searching for perfect. Oh my gosh, we're all guilty of that. When we go out and look for a home, we're looking for perfect. We walk in that home and we're looking for everything to be exactly the way we want it. And it's almost not possible because the house wasn't built for you. Unless you're building a custom home, you're not going to get everything you want. You're going to have to subside with some things. Oh, maybe the kitchen is not exactly where you want it. Maybe it's not as big as you want it, but you got the backyard. You got the extra bathrooms upstairs. So, when you search for perfect, and I've had clients that search for perfect and they're still searching 2 years later. So it's a tough one. And sometimes when you are searching for perfect, you miss the boat and you never buy. So know that there are some things that you have to let go of. I mean, I don't want to be the one out there saying that, but sometimes there is. And I also want to put a disclaimer now that this is an article that I'm reading. It's not an article that I produced, so I don't necessarily agree or 100% with everything in here. I think there's different ways to approach everything. But I think these 7 steps are a good basis if you're looking to, and you're a first-time home buyer. But I would say the top, if there was a number 8, and I'd put it in number 1 position, would be get a real estate agent and get a mortgage broker. Get both in your pocket to help you to make sure that when you do finally step out there and you buy that home, you're not regretting it 6 months later. So, can anybody relate to any of these mistakes? Have you been in the market and you're like, yeah, I've done that. Yeah, I've made that mistake. Write in, let us know. Give us your story. We'd love to hear it.
Mm-hmm. What I'm curious about is like the skipping inspection, because the market recently has been pretty crazy. There hasn't been too many clauses for inspections. It's pretty much been just, I'll buy the house now. Here's the money. Please take my offer. And people have been kind of skipping over that. So I'd be curious to know, like, of all these transactions that have happened, and say in the last 6 months or so, how many times that come back to bite you, like, or bite people? Because again, you never know. Like, and depending on, not everyone is knowledgeable about the things in the home, whether like the roof or like there's little things that you won't know unless you're trained to see that. So I don't know offhand, but I would just be kind of curious to see how many people are kind of looking back now and saying, "Oh, I know I wanted the house, but we really should have gotten that inspection." So
every single one of them. Every single one of them, every house, like even our house, you've been in it for years, you spent money on it, and there's problems, and you got to get things fixed, and so no house is perfect, and there was a lot. Like I just wanted to talk all the way through yours. There was so much.
So you were biting your tongue?
Yeah. So let's go back to number one: giving up before you even start. That unfortunately now, as Brenda had said, is not something that she wants to do. It's just that the market has outpaced her. It's a combination of anytime that Brenda, you will see in the future, or any of your kids see in the future that the government goes rogue. Anytime we'll have like a Liberal or NDP government for sure, and then they start going rogue with spending, you're going to experience inflation. And so things are going to get more expensive, and then they're going to get too expensive, and then we're going to experience either a crash or a recession, or we're going to experience something, because that kind of growth is just not healthy for anybody. As we know, and as you definitely know, Brenda, at one point there was an article when we have an overall company meeting every Monday, and one of the things that was brought up in that meeting was a gentleman who at the time, I think he was a mail clerk working a room, and he wanted to buy a house, and the house across the street came for sale. It was 200 and something thousand, and he could have bought it, but he said he wanted to wait and get a better house later on, and he became a lawyer and a partner in the law firm, and now he makes a lot of money, and now he qualifies to buy the house across the street that's $1 million and something. So he does qualify for a lot more money, but it's the same house. So, so isn't that interesting? And so I really sympathize with you, Brenda, and it's really hard. Basically right now, what we just experienced was a transfer of wealth. The people who were in the market, those people were the lucky ones, and they're on the other side of the fence. And the people who weren't, who were renting and wanted to get in the market, those are the unlucky people, and this is the way in which horrible things sometimes work. Our government, first of all, went and attacked first-time home buyers when they said that we're going to put this stress test in, and you have to qualify for how many percent above, 2% above what you're buying. And what happened there was they wiped out 30% of the marketplace. As a matter of fact, it was more aggressive than 2% at the time when they did it, especially for the first-time home buyers. It was 2% for the people putting 20% down. First-time home buyers, it was like they had to qualify at 5-point-something%. So they were struggling to get into the marketplace, and then all of a sudden they couldn't qualify. So the government sort of kicked out 30% of the marketplace. They spent money like crazy, caused inflation to happen, and now being able to afford the house is really, really difficult. So I feel bad. That was number one. Did you want to comment on number one? I wanted to talk about a couple of these.
You're good,
no,
you're
keep
good.
going. Making the right offer. Well, obviously, I think Jackie was right in saying the most important one that I see in here, and the biggest mistake that I see buyers making, because they actually believe the unbelievable. They believe if they go to the listing agent directly that they're going to get a deal. Now, that may be possible. I really can't say that's not possible. I just know that if you do that with us, if you come to us on one of our listings, you're not going to get a deal. As a matter of fact, you're probably going to pay more than if you had. You're probably going to pay more than if you had your own rep. That's a professional rep that knows how to negotiate. And the reason why I tell you that is because we signed a contract with our sellers in order to get them the most amount of money. And just because you came to us dangling a carrot of commissions, we are not going to take money away from our seller in order that we can earn more commissions. We're just not going to do that. And I will tell you, there's realtors out there that won't do that either. There's other realtors that they take their commitments to their sellers very, very seriously. So what I would say, and I've said this too, and we've had that where buyers have come to us and they says, do you realize that you've come to the wolf to actually help you to buy this house? Because we are the wolf. Do you have your own agent? And because we're going to work aggressively to get ourselves the most amount of money, we will not represent your best interest. We will only make sure that you have a sound contract, and that the paperwork that you have is there and it's legal and it's in place for you. But we're not going to work in your best interest, and we're not going to sign you on as a client because we already have a client. We're not going to have that conflict. Even though in real estate it's not called a conflict, it's called mutual representation, where we're representing two parties. Both parties get to know, they hold their cards close to the chest. Quite frankly, I think that's a bit schizophrenic. How do you represent both parties' best interest? I don't know how to do that because the buyer wants the lowest price and the seller wants the highest price.
We had it once
Yeah,
because
no,
the guy
a lot
was
more
moving
than
from
once,
Montreal.
sweetheart.
No, but I mean once in particular where it was like we straight out said to the guy, like don't ask me why I remembered this.
Because I just said it about when the fox, you came straight to the wolf den.
What's the
That's
fox?
that's what we said to him.
You're the fox. You're
Oh, I know. I'm like,
because prior
I
to
was
that,
just saying, with him, I really remember because he didn't care.
yeah, he did not care.
That's what I was trying to get at, but you kind of stopped me there, like you
Well,
normally
no, but
do.
we had it also
Moo.
on our property
Moo.
twice. Jack, don't forget, on Pickering we had it, on Scarborough we had
Moo.
it.
Okay.
Anyways, so the thing is that
yes.
So
But I was talking
so-
about a client because you were talking. I wasn't talking about on our own personal.
But he's
properties.
not a client. It's called a customer.
No, I mean we had a client. The listing was our client. We
Right.
weren't the client.
Okay, so the difference. Yeah, the difference between customers and clients in real estate is a legal term, and so as a client, we have fiduciary duties. We're representing your best interests. As a customer, we still have fiduciary duties, but it's basically to make sure that we're doing everything legal and that. But we're not necessarily looking out for your best interests.
I'll catch you out there for a second. Get to a few emails. I know you can be a little bit long-winded sometimes.
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 You'd be a nice answer.
I'm okay with that.
All right, so we got an email from Joe. Joe says, "Hi, your home show. Is that federal prison in Kingston for sale? I have 12 kids. Thanks."
Yeah. Oh, Joe, you've been busy.
I got 3, but I might be fighting you for that one, Joe. Get at a discount here. Our next one is from Wayne. Hello, real estate folks. Excellent information today. Thanks. Thank you, Wayne. And back to you, Randy.
Okay, so that's why I think the one about the broker is the most important, because
Yeah.
that'll help you to make the right offer. Now, if you come to us and you're our client, then what's going to happen, like Jackie said, there's so much information that we're going to give you on a particular home before you even buy it. You're going to know what all the comparable sales were in the neighborhood. You're going to know what the demographics are for the neighborhood. There's a lot of information that you will know before you go a deep dive into making that offer. But as a customer, you get none of that. So when you go straight to the listing agent, you're hoping, what your hope is that he is greedy about the commissions, and he will discount, basically either discount the commissions or do something to help you, or break his fiduciary duties with the seller and actually disclose to you something that would help you to get the home. And I don't think, it would be very rare for you to be able to get that unless the realtor is actually not following the rules and regulations. So I think you're wasting your time doing that. You don't have somebody that's looking out after your best interests, and you're there just kind of desperately hoping that you're going to get something. So it's best that you get a relationship with your realtor, one that knows what they're doing, and that, of course, that you feel comfortable. Interview 3, pick one, and then they will go and represent you best and get you the information you want. Skipping the inspection, you had to. You had no choice. However, the marketplace has changed, and that's not what you need to do anymore. So now an home inspector will become part of your team of professionals. And Jackie was touched on it, that you're going to want your team of professionals definitely to be in your pocket, so that you can properly purchase a home. And the other one that was here, searching for the perfect home. We did kind of touch on that a little bit, and I do know of a client who was like that, searching for that perfect home, eh? And unfortunately, like Jackie said, what happens is they end up not getting any homes. And the perfect home really doesn't exist. I mean, we've owned several homes. None of them are perfect. Some of them are beautiful, but none of them are perfect.
They're not made for you, so they can't, I don't know how they can be perfect.
And I will tell you this, I will take that one step further, and that was something that you had said, and I really kind of agree with you. They're not made for you. However, even if you make your own home, it will not be perfect. That's the thing that you kind of need to know. You're going to go out, you're going to do what you can with the money that you can, and it's not going to be perfect. Even if you could do everything that you would want in a home, the home's still not going to be perfect. Even if you had unlimited money, the home would still not be perfect. So looking for that perfect home is definitely something that you're going to need to compromise on area, compromise on home, so that you can make it work. That was a good one, hon.
All right, sounds good.
Well,
All right.
thank you.
We're compliments here.
I know.
All right, before you go, Randy, just again, a quick reminder, guys, any comments, any questions, any topics, anything you guys want to hear about going forward, just shoot us an email onair@yourteam.pro.
Okay, excellent. So now what I'm going to try to do here, I'm going to try to run through some slides. I've got about 14 minutes. And so I'm not sure, do you need the mouse in order to get this on YouTube? You're good? Okay, great. So so here it is. Is the market, Toronto real estate market, crashing? Well, stay tuned and click here. No, it doesn't necessarily work like that, but I will tell you this. If you follow me and listen to what I'm telling you, you will have a better understanding of if the market is really crashing or not. So right here, for the people who are following on YouTube, I actually don't know how that works. I think it's Your Team Pros you look for on YouTube, and then there's a Your Team thing, and then you go there and you push it.
I don't know
and
how.
then,
I tried the other day.
And then you'll see it.
Very descriptive, Randy.
And
Yeah.
and
Can somebody please
we'll get a better
straighten
description
that out?
for
Yeah.
next time. But right now, what I have on the screen is I basically have the historical, or actually last year's percentage over month over month. And what we're seeing last year in January was up 3%. In February is 8%. March it was 5%. Then it went down 0.06%. In April, it up 1% in May, and then we started seeing similar type increases, 1% and 2% either up or down per month for the months. But that was last year. Then this year, and overall, we ended up with like a 17% over, 17.8% over last year, the year before. So 21 over 20. And so that was a great increase. It was the most, the highest sales year on record. Okay, so there was 121,000 transactions. We've never had that many transactions before. So given that, we are now competing against last year's sales. So keep in mind that if we're competing against last year's sales being the record, there's no wonder that this year's numbers are lower. Remember, we're competing against the highest volume time ever in the history of the Toronto Real Estate Board. So seeing numbers declining shouldn't be a surprise. right? Especially when interest rates are going up like crazy and there's so much negative talk within the marketplace, people will be afraid. And that's what we're kind of seeing. We're seeing confidence. Everybody's sort of standing on the sideline saying, what's going on? All the videos that I'm seeing from the realtors out there are talking about a real estate market crash. And quite frankly, I'm not seeing that. What I am seeing is overall in our economy, I'm seeing things are just not good. But I'm still not seeing a real estate crash, people. But the prices have changed. How the prices are changing is really the question of if there's a crash or not. I'm not saying there's not going to be a crash. What I am saying is that right now, I'm not seeing numbers that tell us that there's a crash. All I'm seeing is an adjustment in the marketplace, which seems to be relevant when you're looking at percentage to many other years. So what I believe, hold on, sorry, let me go back one more. So what we had is was it 7.7% in January increase, and then 7.4% in February increase. Then in March we had a decrease of 2.5%, and in April 3% decrease. So March and April are decreases, both of them relatively modest actually, compared to the increases. Remember, January and February are both 7% increases, 7+% increases. March is really a 2.5% decrease, and then a 3.whatever% that is 5% decrease in March. And that's that's really all we've experienced so far. So then now with the economic indicators, and this is really where the marketplace is kind of a little bit scary, where we have real GDP growth at 6.6%. So that's incredible. That's awesome. However, if you look back one year in 2020 and you're seeing that we had a negative 5.4% growth, that's a problem. So, and that, that was a decline from 2019. And so there's really where our problem is. So it looks like this year that our economic growth is good, but really because last year was so horrible, when you put those two together, we're only having like a 1% increase. That's not good. The employment growth, they're saying is 7.6%. Unemployment, they're saying 7.2%. We're looking at 7.2% unemployment, whereas last year was 9.6%, so it's actually getting lower. But is it getting lower because more people are back to work, or is it getting lower because after 6 months, the numbers drop off and those people aren't considered unemployed anymore, even though they're unemployed? It's just the way the numbers work. I really don't know what that is. You need to do a lot more digging, but that's the way they record the stats, right? So average inflation is 6.7%. So we're looking at last year at 0.72. And then the year before that, 1.95, 2018 is 2.27, 2017 is 1.6. Those are kind of normal inflation numbers that we can live with. Then from 2020 at 0.72, because they went in and they changed and massaged the basket, and then now we're getting, they're basically lowering inflation when they change the basket. And then what happens? Our inflation numbers are 6.7, which is totally out of whack. Remember, it's supposed to be under 2%. This is why the Bank of Canada is raising the rate so rapidly, because they're looking to control that number. Unfortunately, the truth of the matter is that number is really high because the government's done a whole bunch of spending. So by punishing us, by increasing the interest rates, you think you're going to lower the inflation when the inflation rates are not necessarily caused because of you're not going to really, more importantly, you're not going to really change. I believe you're not really going to change the inflation rate by increasing the interest rate in this environment, because I believe this environment is more caused because of spending more so than anything else. And that's why I don't believe, I don't even believe that all the inflation has played itself out. We've been spending money like water for 2 years. And one of the reports that I saw, the money that our government spent is 40% more than our government has ever spent in the history of Canada. When you add it all together, that's just massive. So no wonder we're experiencing inflation like this. And we're not, and as we've talked about on the show, nobody's experiencing a 6% inflation. We're all experiencing inflation at ridiculous numbers. I say 30%. I don't know about everybody else. Now it's almost impossible to afford to go out for breakfast. Breakfast costs what dinner used to cost. If you take your family out for breakfast now, you're paying what you used to pay for dinner prices. A few years ago. It's insane.
About $100
So you
for
can't
4
do that
people.
no more. It doesn't make sense. You know, for a couple
We
of
used
eggs.
to do it every Saturday.
So the
But-
thing is I just want to let everybody know out there, this is a little hack. You're allowed to have a chicken. So if you get yourself a chicken and a little coop, you can get yourself eggs. If you can get that chicken to produce an egg a day or two, then you can feed your family and save some money. That's my little hack.
Hey,
two
listen.
eggs?
With 2 eggs,
You
well,
can't do that.
if
You
you're
can
a
feed
single
you,
person,
yeah, not your family.
maybe you split the egg.
But-
you get a big chicken, a
But-
nice big egg.
But
like,
the nice organic eggs are $8 for 12. They're almost $1 an egg right now
how would you even know that?
because that's the eggs I buy.
Oh my. Okay.
Well, you gotta be careful. Okay, folks,
So
listen, you gotta be
sales,
careful with
sales
eggs. They got a lot of
and
cholesterol.
average. So you got to remember that it's my time. Yeah, that's right. Sales and average price. So here I am at sales and average price. The year-over-year percentage change is what I'm looking at right now is the 905. In the 905 area, we are seeing the biggest decline in the number of sales, way bigger than the 416 area. Why that's important is because where the biggest declines are in actual sales is where we're going to begin to see a buildup of inventory and a bigger decline in actual prices. So watch what happens. You're going to see the 905s begin to do the bigger declines, and the 416, it's going to be a tighter market, and those prices are going to hold a little bit better. The average price for the 905 areas is the highest increases as well. And where we're seeing the highest increases, that's where we're going to see the bigger adjustments. So don't be surprised when people are putting out these videos where they're going to say big adjustments happening or the market's crashing in the 905 areas, because it's not necessarily crashing. It's doing that adjustment. Remember this. We are 15% over last year. That is not a crash. But because we were 30% over last year 2 months ago, people are calling it a crash. I don't see it as a crash yet. I'm not saying that one may not happen, but right now, that's not what's happening. Average detached home is a little over 1.6 million. Average semi-detached, a little over 1.2 million. Average townhouse is over $1 million now, and the average condo is 789,000. These are incredible numbers, and so we're seeing double-digit increases in all market segments this year, April, over last year, April. Last year, April was the best year. Last year was the best year ever. In terms of transactions, and we're running at 15% over last year, even though it's declined huge between January, February, March, and April. We've had a huge decline, and we're still running 15% over last year. So is that a market crash, guys? I don't know. You tell me. Year over year summary. Sales are down 41%. New listings down 11%. Active listings are up 12%. How are active listings up 12% when new listings, new inventory coming to the market is down 11%? Well, that's because sales has declined 41%, and that's why sales are so low that the inventory is building up. Okay, average price is up 15%, and average days on market is kind of holding steady, but we're seeing it decline. What I did here is I put together, for the people who are following on YouTube, I put together a bunch of charts. It's kind of hard to really understand what's going on if I don't explain, but we got basically looking at the sales, we're looking at the months of inventory, active inventory, and new listings, months of inventory, and average days on market. And we're looking at all these things on a monthly graph, a quarterly graph, and a yearly graph. And we are seeing a decline overall in the market. That's what's happening there. And so definitely everybody is right when they're saying that the market is going down, and it is, but it still hasn't gone down over last year. And even if it goes down over last year, really speaking, this is what Brenda is asking for. She's asking for a retraction of the price. Right now, we don't have a retraction of the price. We have a retraction month over month. We don't have a retraction year over year. And that's what we need to help Brenda. Because the month over month retraction, we're still over last year, 15% over last year. I am out of time. I'm going to run through this really quickly, these last couple of quick graphs. April, the average, the home segment that sold the most was the $1 million home segment. But year over year to date, the highest home segment that sold is the $1.25 million segment, which tells us that while the average price may be declining, really is it declining because the prices, or is it declining because the top end of the market is not moving? And when the marketplaces are in retraction, usually the luxury homes are the first things to slow down. So that's really what we're seeing. The other thing we're seeing is that there's a 1% difference between the homes that over $2 million that sold throughout the year and what the $2 million homes that sold in April. And that's going to put a downward pressure on the average price. This chart here really just tells us that the average price moves up and down throughout history. And I went back in this case to 1994. Average price is moving up and down, up and down, up and down throughout each year, all the time. That's normal. So what we're seeing in the marketplace is fairly normal, to be honest with you. And the annual average price on the next graph, we're seeing there's ebb and flows, higher, lower, same sort of thing. Units sold, we're seeing that the units are changing. They're actually declining a little bit. We're seeing that the affordability chart, we're seeing that in 1989, believe it guys, in 1988, 89, 90, 91, it was a lot less affordable than it is now. So in terms of how the cash, what the cash could buy, and that's what this chart is showing you here. The dollar change, historical, the dollar change is just basically, we know prices are going up overall. We just talked about it, it's 15% over last year. The historical change in the last 10 years, if you go from 2009, 2019, we're looking at about an average 7.5% increase. The next chart, historical increases. Really, here is really a clear picture that we are actually within the zone right now. We need the market to retract a little bit, yes, to make things a little bit more affordable. We definitely need that. But the increases and decreases that we're experiencing now are nowhere close to extremes that we've had in the past. The decade price increase. This chart here is really interesting because every dot on the map tells you what the decade before average price was. And if you're looking in from like 1971